We'll look at three completely free to use indicators on TradingView. The first one is called squeeze momentum. So go to indicators here on your TradingView, just type in squeeze and it should come up right here. It's this one. So squeeze momentum indicator, click that on. Down at the bottom, this is what you get. We can use this in a few different ways and it's up to you how you want to trade. But you can really feel the momentum of trade in the asset that you're looking at. I'm looking at Bitcoin here. So down at the bottom, we have momentum of the price and also importantly the change of that momentum. So not looking at the actual price but the change in momentum of price movements, and that is really important to figure out the trend of the asset and when trends are changing, and that gives us trading opportunities. So there's a few different ways to actually use this indicator. The first one is to look at how momentum is changing down here at the bottom. So look, we're in a big bear market here for Bitcoin, right? Very, very clearly. And so what we're looking for is for the momentum indicator to tell us when that momentum is changing. And so we can try and figure out if the bear market momentum is basically finished and we're now moving into a recovery or a bull market momentum. And so what we can do here down at the bottom is find the momentum change. So the first thing is when you have positive momentum, either, upwards or downward price movements, but the momentum is carrying on, right, and getting stronger, that's where you get the kind of vibrant colors, right? And so that's showing that the momentum of that price movement isn't slowing down. Green is obviously positive momentum where prices rise. Red is obviously negative momentum. You can see that during this time, this is all positive momentum in that trend is not changing, right? So we can firstly figure that out. Now, when you get these colored in or grayed out areas, that is showing you that the momentum of that specific price movement is now getting weaker, right? So that's positive momentum up here when you had price movements to the upside. And the squeeze momentum indicator literally perfectly calls it where that momentum's basically finished at this point, right? So firstly, we can figure out, is the momentum of a move strong and is it continuing or is it weakening? Down here, it's the same. You have this negative momentum, right? But the momentum slows a little bit, even though prices are still going down, right? And then it gets stronger again. And prices, even though they're kind of going sideways at this point, so that means the negative momentum is actually slowing down, right? So that's how we can read them. But if we take a step out as well, essentially this right here, during a bear market, we can see that that momentum to the downside is starting to weaken. So even though we aren't climbing out of that bear market and downwards price movements, we are looking at this and thinking that momentum is getting weaker, and eventually you're seeing that the price starts to recover a little bit. So that gives us a very good long-term view, right? I'm on the weekly chart here. I think squeeze momentum is better on the weekly. It gives us a good long-term view of the momentum of longer-term price movements, because what squeeze momentum is doing here is saying, look, we're in a bear market. In a bear market, even though the momentum's slowing down, it's not gone into positive, right? And so we're still kind of weak, but you can see that actually we're making a higher low. And so the weak momentum is starting to change into slightly stronger or neutral momentum. And that is actually indicating potentially that that bear market is starting to come to an end. And then you can just feed that right through into eventually positive momentum. So where do you want to take your trades? That's up to the individual trader. Do you want to, wait until the momentum actually goes into positive territory? Do you want to get in a little bit earlier where the downwards momentum is actually starting to get weaker and moving up? That's up to the individual, but that is how you can search over the longer term for momentum. And you can see now momentum here getting a bit weaker, which is a consolidation, another move upwards. And then here you actually have weak momentum, but it goes into a stronger momentum piece again. So it's up to you how you want to trade that. But you can actually see longer term momentum changes, which is very important to get your bias about how the price is moving longer term. The other way to use this indicator is much shorter term and much more tactically to actually enter trades. So an example would be, when we move from this weak momentum, right, which is consolidation, and then we move up into positive momentum again, you can take long trades, right? So that trigger from below to above the kind of zero line, you can then take trades on that. So that would be a trigger there, right here, and this would be a trigger, and this would be a trigger, like this. So you can actually wait for those consolidations to occur and then go long. Now that only works in a bull market, right? So you have to get that first, get your buyers first. And if you're trading long in bull markets, you can wait until the momentum changes and then basically ride that move to the upside. Now, also, you can be a bit more tactical during bull markets as well. So for an example, big bull market here, so an uptrend. Down here, we have that strong momentum weakening right here. This is a consolidation, right? Over a few weeks of trade. Now, you can either wait for that to maybe sell some, or if you have a longer term trade for a entire bull market, let's say you've got a 12, 18 months time horizon, and you think that the price will be relatively strong during that time, you may not need to sell some here, but you can actually wait until the momentum changes again into positive. So even though it didn't go negative here, we had the momentum, we consolidated, then we had strong momentum again. And you can wait for that to maybe try and get into some other trades. And so you can wait for that weaker momentum starting to change, and that indicates that maybe a consolidation or a small drawdown during a bull market actually is starting to change into the upside again, and you can kind of get in a little bit early on those, right? And so again, here we had a big downwards momentum consolidation here. If you're in a bull market, then maybe you look for these periods as well to get in. So there's many ways to use it and opportunities to get in, but firstly get your bias about what's going to happen to the price over the next 12 to 18 months. Then you can use this more tactically to get into trades. Because squeeze momentum is giving me those great entry points, I can now go over to my trading system, and these are the entry points that it was giving me. And as you can see, they're basically the perfect time to actually get into trades for a next move up, and the momentum continues. So this works as long as the asset that you're trading is trending and you're confident of that trend and you have your bias already. So I want to go long in bull markets, and I want to accumulate a little bit more during these consolidations, or maybe go into some riskier trades during those consolidations, just to try and get a little bit more out of an uptrend and a bull market. If you trade crypto and you don't have a Bybit account yet, you can get a deposit bonus via the link below, up to 30,000. Whatever you deposit, you'll get a bonus. If you can't trade on Bybit, use Bybit's DEX. You can trade directly from your crypto wallet. You get a permanent fee discount and a bonus via the link below in the description as well. The next indicator is heikin ashi RSI oscillator. Right here, you can put this on. Now, I feel like this is way too noisy on the lower time frames. So if I go to the daily chart or anything under that, you get a lot of noise, and it can be used, but you have to figure out what the longer term trend is. For example, you just get a lot of momentum changes here. The price isn't really doing much, and if you try to trade this, you can get chopped up. I prefer to look at least the weekly on this, and I think it gives a much stronger indicator. So again, on the Bitcoin price chart. So if you are confident of the trend and you have your bias already, so for example, with Bitcoin, one of the best performing assets over time, it has a lot of natural growth in it. So what do you really want to do with the asset? You want to buy it where you can and take advantage when prices are relatively weak within trends. And so we can use heikin ashi to do this. Now, heikin ashi candles take some data from the current candle and the previous candle, put them together. So it kind of tries to smooth out price movements. And that's great in an asset that's very, very volatile with price. Try and smooth that out and find areas where the price is relatively overbought or oversold. So in the very long-term trend here for Bitcoin, the price chart, we can see areas where the price is relatively weak. And so if you're looking to purchase the asset and buy the asset, taking advantage of any of these weak times has been, if you just correlate this to the price chart, brilliant times to accumulate during Bitcoin's consolidations, which always happen. Now, some higher prices here, some lower prices there, but if you've got a slightly longer time frame, 4 years or so, 8 years if you're investing, these are literally the perfect times to actually have got in and get a decent price for your assets, especially if you've been dollar cost averaging at higher prices. These areas where Bitcoin consolidates and goes down are absolutely perfect. And you have to be confident that the asset will grow out of those, of course. But these areas are absolutely perfect. Now, that is for longer term investing, but you can also use it on slightly more tactical trades where, again, you just see the momentum change, right? So we're seeing momentum change. Now, remember, heikin ashi kind of smooths out these changes in momentum, and this yellow line here is showing us that momentum change. It's a very weak momentum, but you can very clearly see the momentum change here. So the heikin ashi moves above the midline, and the smoothed out oscillator also moves. That's showing that that weak momentum is changing into more bullish momentum here and a potential trade, right? Get into the trade, wait for a few months, see what happens. And you can see eventually we have this weak momentum. Didn't need to get in too early, just wait for the momentum to change. You can see it changing here, you can see the momentum moving up. Again, great time to get in, and you can see most of these, as long as you're in an uptrend and you're confident of that uptrend, you can see the momentum change, we start to move, and you can tactically get in. So longer term and shorter term, you can use this indicator for. A custom MACD indicator is the next one. So type in MACD and then custom. This one right here. 64,000 users. So click on that, and that gives us this. Now again, this is a momentum indicator. It can give false flags. You can see there are red and green dots here, which can show us that the momentum of the price movement is changing. So obviously a green dot, you're looking at the moving averages, right? Moving average, convergence, divergence. You're taking two different moving averages and trying to find where the momentum of price movement is changing. And so a green dot is obviously where some negative momentum is now changing into positive momentum. That would be a buy signal, but you can see it's not the most accurate. You also have a sell and a buy signal here, and another sell signal, and then a buy signal. So again, it's getting a little bit caught up over itself, but you have some buy signals here. So it's just showing you the two moving averages. As the lower time frame moving average moves up through the higher time frame, that's showing that momentum is becoming bullish, right? And again, these red dots to the downside where you're seeing momentum change. So the buy and sell signals may not be what you can look at. If you take a step back again, you can find the momentum of the price chart. So as an example here, you can see in the previous bull market, the price made a high, then we drew down, we actually made a higher high. And so a lot of people getting in here thinking, well, we're making a higher high, Bitcoin is still very bullish. If you look at the momentum of the price with the MACD, you're seeing a massive bearish divergence here. You're seeing price make a slight new all-time high, but the relative strength of the move extremely weak. And because of this, that shows you that potentially the entire move is breaking down. The momentum of that bullish move is very weak. And so that could have actually saved you from getting in too much at the top of that bull market after a big drawdown here. And then you just see that carry on and continue all the way this weak momentum. However, as it changes, right, you see that here, you actually get a fantastic buy signal here, but you can see the momentum is just starting to get stronger again, right? And so that would be the start of maybe some strength and momentum here. And you can maybe get into trades, 1 to 5 trades, dollar cost average, decent prices here if you're looking over the longer term, right? And you're seeing the momentum change, you're seeing the bear market now come into somewhat of a recovery. And then you're seeing here again, if you're looking at simply the relative strength of moves, you're seeing a huge bullish momentum. Yes, we get bearish momentum here during a consolidation, but we're moving back into bullish momentum, right? And so if you're looking at this, you're saying, actually, this is more bullish momentum where you are drawing down in bull markets, yes, but you have bullish momentum here. So if the MACD also draws down to this level and starts to bounce again, you're basically making higher lows and making an uptrend of momentum, which is actually gone all the way from here, right? So that would be a very, very bullish chart to get into because it's showing an uptrend, bullish momentum, and then you can take opportunities when you just get some drawdowns and consolidations in price. So I think these 3 indicators are perfect to look at that momentum. You can use them longer term or shorter term if you want. If you want to trade crypto on the exchanges I use, you can get some deposit bonuses and fee discounts via the links in the description. Check out the Crypto Investor course for 300 videos on getting set up in crypto as well. I'll link it down below. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.